before applying any tool on your chart is to understand where it, within the market cycle, where it's most applicable, when it is going to give you a good idea within its understanding of the market. Now, I can't tell you how many times I've seen people use moving averages in a sideways market or use a stochastic in a trending market. Powerful tools, but probably not the most ideal market cycle to apply them to. Okay? I hope I've made my point there. I also want to mention that tools are not designed to really determine your entries and exits necessarily. For me, they're confirmation of levels that I might already be seeing on the chart itself. Okay? They should not be making trading decisions for you. What I find ideally indicators are best designed for are to confirm levels that I should be watching on the chart anyways based upon price action, whether it be the confirmation of some sort of ceiling or floor based upon a candlestick or a chart pattern or price action, support, resistance, trend lines. These indicators help confirm that. Okay? All right, so let me show you what a histogram looks like. And we'll just do that really quickly right now, and then I'll go ahead and install the traditional on our chart here. So if we look at an MACD 1226.9 setting, which is a default setting, I recommend leaving the default setting because, in my opinion, you don't want to get too cute with your settings. Okay? There is a psychology behind very popular or default settings on your indicator. Realize, in the most psychologically significant way, a 200 period simple moving average, okay, which you see here on this screen, is probably the most popular, the most well-watched, followed indicator and setting that there is in any market. For that reason, there's a certain psychology that it holds. Some people will dismiss technical analysis and indicators and chart study as self-fulfilling prophecy. I think to ignore that small aspect of the analysis would be ignorant, but I think to simply dismiss it as only that would be equally ignorant. I think there's a healthy mix of the two. I think that these indicators do in fact help identify certain support and resistance levels, certain decision levels on a chart. At the same time, if they are more psychologically significant, in other words, they're more common and well followed, they can also create, additionally, that self-fulfilling prophecy. So you put those two together and you've got a great combination. So again, my opinion is keep them on the default settings. I know a lot of people like to do a lot of testing, and certainly I'm not dismissing that, but I think initially, when you're learning how to use an indicator, use those default settings. So basically what you're doing is using an MACD to do what it does best. It is able to, I think, quickly and very clearly identify the increase in the short-term momentum, whether that be up or down. So if you were to take a look at the histogram bars here, the histogram bars are these long lines you see moving vertically. They're split by this line in the sand called the zero line. Okay, so they're either below or above the zero line. Now again, there's many ways to use this indicator. I'm going to share the one that I find the most beneficial and, to me, the most clear-cut. I like to use indicators in what I call an on-off manner. There's already a lot of craft and art and subjectivity to trading. My goal is to keep things for myself as objective as possible. So when I'm using an indicator, I want to be able to use it basically in an on-off manner. In other words, that translates to the MACD histogram or the MACD traditional as either being above the zero or below the zero. So if this zero is basically that line in the sand that divides positive and negative, I want to focus on whether it's a positive reading or a negative reading. That's it. And that will help me identify whether momentum is bullish, if it's above the zero, or bearish, if it's below. Now, when is the right environment? To me, the right environment or the right setup, the best suited setup would be when the market is moving sideways within some sort of consolidation or congestion. For any of you out there that might be utilizing chart patterns or the automation of using, for example, the PRS, which we will be discussing later on in this series. You know, if you get a rectangle pattern or a triangle pattern, asymmetrical, descending, ascending, those are consolidation and congestion patterns. Those are patterns that occur in a sideways, ideally sideways market cycle. Oftentimes, you know that there's a very fine line between the low volatility and the clean, quiet price action known as the accumulation market cycle, and its cousin, the more volatile distribution market cycle. Now, the difference between the two is the difference between seeing whipsaws and seeing follow-through. As a general rule, when you see triangles and rectangles form, when you're looking at a sideways market cycle that you want to utilize the MACD within, it should be ideally that accumulation, that sideways, well-organized, low volatility price action. Because then what you're able to do, if prices are able to rally and break your resistance, whether it be some sort of price level you're watching, a downtrend line, a horizontal resistance, if they're able to rally up and break that level, you can use the ability of the MACD to quickly spot these increasing short-term momentums, in this case to the upside, and you want to see the histogram bars plotting above the zero line and maybe even increasing in the height of their bars. Okay, that's the way I like to utilize it. Very, very clear in terms of the reading of it. This is just one way to utilize this tool. I'm by no means stating this is the only way. I'm not even stating you have to use it. Okay, I'm giving you, I think, what is a very simple, good beginning to incorporating this tool into your trading. Okay, by the way, let me jump over to the IBFX website and to show you all briefly. You can see here on the website the MACD traditional, and you can also see the download tool button right here, and it's with that download tool button that you can actually go ahead and install the tool. So if you click on download, what essentially happens, and like I mentioned, I didn't want to get too far into the tech aspect, but you'll get the pop-up window, and if you go ahead and save the file, I recommend saving the file to a desktop, or if you have a specific download folder, put it somewhere where you're not going to have to hunt around to find it. Okay, so you go ahead and save that file, and since it is a .exe, it will self-install. Okay, so again, you can see every one of these tools has the instructions right on the website, a little description of what it does for you. Okay, pretty simple, right? Okay, so back over to the platform. And again, I usually save it to the desktop. That's just my preference. And the icon will actually should show up on your desktop as an IBFX with the name of the tool. If you double click it and click Run, it will essentially just walk you through the installation. You'll have to accept the terms of the license agreement, and then off you go. Okay, so that being said, I believe once you install the tool, you'll have to restart your platform. For those of you that are very new, okay, go ahead and restart your platform. And what I'll do here is take a brief moment to address some of the questions that we have here, and then we'll go ahead and resume our discussion. Let me also mention that if you do have questions after the presentation, okay, you can send them to, and I'll type this in the text box as well. You can send them to Raghee, that's